Reading 2 of the CFA program curriculum. Today on Code of Ethics and Standards of Professional Conduct. Learning outcomes, mastery of describe the structure of the CFA Institute Professional Conduct program and process for enforcement of the Code of Standards. State the six components of the Code of Ethics and the 7 standards of professional conduct. Explain the ethical responsibilities required by the code and standards, including the subsections for each standard's preface. The Standard of Practice Handbook provides guidance to the people who grapple with real ethical dilemmas in the investment profession on a daily basis. The handbook addresses the professional's intersection where theories meet practices, and where the concepts of ethical behavior crosses with the abstract to the concrete. The handbook is intended for a diverse and global audience. The CFA Institute members navigate ambiguous ethical situations. Supervisors or direct or indirect report determinations, the natures of their responsibilities to each other, the existing and potential clients, and to their broader financial markets, and candidates preparing for the Chartered Financial Analyst examination. Recent events in the global financial markets have tested the ethical mettle of financial market participants, including CFA Institute members, the standards taught in the CFA program and by which CFA Institute members and candidates must abide, represent timeless ethical principles and professional conduct for all market conditions. Though adherence to these standards, which continue to serve as the model for ethical behavior in the investment profession globally, each market participant does his or her part to improve the integrity and efficient operations of the financial markets. The handbook provides guidance in understanding the interconnectedness of the aspirational and practical principles of provisions of the Code of Ethics and Standards of Professional Conduct. Code of Standards. The code contains high levels of aspirational ethical principles and dives members and candidates to create a positive reputation, a reputable investment profession. The standard contains practical ethical principles of conduct that members and candidates must follow to achieve the broader industry expectations. However, applying the principles individually may not capture the complexity of ethical requirements related to the investment industry. The Code of Standards should be viewed and interpreted as an interwoven tapestry of ethical requirements. Though members and candidates adhere to these principles as a whole, the integrity and trust of the capital markets is improved. Evolution of CFA Institute Code of Standards, Ethics and Standards of Professional Conduct. Generally, changes to code and standards over the years have been minor. CFA Institutes has revised the language of code and standards and occasionally added a new standard to address prominent issues of the day. For instance, in 1992, CFA Institute added a standard addressing performance presentation to existing list of standards. Major changes came in 2005 of the 9th edition of the handbook. CFA Institute adopted new standards, revised some existing standards, and reorganized the standards. The revisions were intended to clarify the requirements of the Code of Standards and effectively convey to its global membership what constitutes a best practice in a number of areas relating to the investment profession. The Code of Standards must be regularly reviewed and updated if they are to remain effective and continue to represent the highest ethical standards in the global investment industry. CFA Institute strongly believes that revision of the code and standards are not undertaken for cosmetic purposes, but to add value by addressing legitimate concerns and improving comprehension. Changes to the Code of Standards have far-reaching implications for the CFA Institute membership, the CFA program, and the investment industry as a whole. CFA Institute members and candidates are required to adhere to the Code of Standards. In addition, the Code of Standards are increasingly being adopted in whole or in part by firms and regulatory authorities. Their relevance goes well beyond CFA Institute members and candidates. Standards of Practice Handbook. The periodic revision of the code and standards have come in conjunction with updates of the standards and practice handbooks. The handbook and the fundamental element of the ethical education effort of the CFA Institute and the primary research for guidance in interpreting and implementing the code of standards. The handbook seeks to educate members and candidates on how to apply the code of standards to their professional lives and thereby benefit their clients, employers, and investing public in general. The handbook explains the purpose of the code and standards and how to apply in a variety of situations. The section discusses and amplifies each standard and suggests procedures to prevent violation. Examples in the application of the standards section are meant to illustrate how the standards applies to hypothetical but factual situations. The names contained in examples are fictional and are not meant to refer to any actual person or entity, unless otherwise stated, e.g. when one or more people are specifically identified. Individuals in each examples are CFA Institute members and holders of the CFA designation. Because factual circumstances vary so widely and often involves gray areas to explore explanatory material, and examples are not intended to be all-inclusive. Many examples set forth in the application section involve standards that have legal counterparts. Members are strongly urged to discuss with their supervisor and legal and compliance departments the content of the code and standards and the members' general obligations under the code and standards. CFA Institute recognizes that the presence of any set of ethical standards may create a false sense of security unless the document is fully understood, enforced, and made a meaningful part of everyday professional activity. The handbook is intended to provide useful frames of references that suggest ethical professional behavior in the investment decision-making process. The book cannot cover every contingency or circumstance, however, it does not attempt to do so. The development and interpretation of the code and standards are evolving processes. The code and standards will be subject to continuing refinement. Summary of changes to the 11th edition. The comprehensive review of the code and standards in 2005 resulted in principal requirements that remain applicable today. The review carried out for the 11th edition focused on market practices that have evolved since the 10th edition, along with updates to the guidances and examples within the handbook. The 11th edition includes an update to the code of ethics that embraced the members' role of maintaining the social contract between industry and investor. Additionally, there are 3 changes to standards and professional conduct, which recognizes the importance of proper supervision, clear communication with clients, and the expanding the education program of the CFA Institute. Inclusion of updates CFA Institute mission. The CFA Institute Board of Governors approves an update mission for the original section, including the preamble of the Code of Standards. The new mission conveys the organization's convictions in the investment industry's role in the betterment of the society as large. Mission to lead the investment profession globally by promoting high standards of ethics, education, and professional excellence for the ultimate benefit of society. Update Code of Ethics principles. One with bullets of Code of Ethics was updated to reflect the role of the capital market, how the greater society as members work to promote and maintain the integrity of the markets. Their actions should also help maintain the social contract with investors, promote the integrity and uphold the rules governing capital markets. New, promoting the integrity of and viability of the global capital market for the ultimate benefit of society. New standards regarding responsibilities of supervisors, IV, bracket C. The standards of members and candidates with supervision or authority over others with their firms was updated to bring about improvements in preventing illegal and unethical actions from occurring. Fast facts of old original versions. Old members and candidates must make responsible efforts to detect and prevent violations from applicable laws, rules, regulations, and code of standards by any subject to their supervision or authority. New members and candidates must make reasonable effort to ensure that anyone subject to their supervision or authority complies to applicable laws, rules, regulations, and code of standards. Additional requirements under the standards of communication with clients, prospective clients, give the constant development of new and exotic financial instruments and strategies. The new standards regarding communication with clients now includes an implicit requirement to discuss the risk and limitation of recommendations being made to clients. The new principle and related guidances to take into account the fact that levels of disclosure will differ between products and services. Members and candidates along with your firm must determine the specific disclosure their clients should receive while ensuring appropriate transparency of the individual firm's investment processes. Disclose to clients and prospective clients significant limitations and risks associated with the investment process. Modifications to standards VII bracket A. Since the standards was developed, CFA Institute has launched additional educational programs. The update standards not only maintains the integrity of the CFA program, but also expands the same ethical considerations when members or candidates participate in such programs as the CIPM program and the CFA Institute Investment Foundation Certification Program. Whether participating as a member, assisting with the curriculum or an examination, or assisting candidate within a program, we expect them to engage in these programs as they would participate in a CFA program. Conduct as members and candidates of the CFA program. Members and candidates must not engage in any conduct that compromises the reputation or integrity of CFA Institute, or the CFA designation, or the integrity, validity, or security of the CFA examination. New conducts as participants in CFA Institute programs. Members and candidates must not engage in any conduct that compromises the reputation or integrity of CFA Institute or the CFA designation of the integrity, validity, and security of CFA programs. General guidance and example revision. The guidance and examples were updated to reflect the practices and scenarios applicable to today's investment industry. Two concepts that appear frequently in the updated in this reliance on output of quantitative methods. The use of social media platforms have increased significantly since the publication of the 10th edition. And although financial modeling is not new to the industry, the update reflects upon actions that are viewed as possible contributing factor to the financial crisis of the past decade. CFA Institute Professional Conduct Program. All CFA Institute members and candidates enrolled in the CFA program are required to comply with the Code of Standards. The CFA Institute Board of Governors maintains oversight and responsibility for the Professional Conduct Program, which in conjunction with the Disciplinary Review Committee is responsible for enforcement of the Code of Standards. The DRC is a volunteer community of the CFA charter holders who serve on panels to review conduct and partner with professional conduct staff to establish and review professional conduct policies. The CFA Institute bylaws and rules of procedures for professional conduct form the basic structure for enforcing the Code of Standards. The Professional Conduct Division is also responsible for enforcing testing policies of other CFA Institute education programs, as well as the professional conduct of CFA certificate in investment professional management certificates. Professional conduct inquiries comes from a number of sources. First, members and candidates must self-disclose on annual professional conduct statements all matters that caution their professional conduct, such as involvement in civil litigation or criminal legislation, or being the subject of a written complaint. Second, written complaints received by professional conduct staff can bring about an investigation. Third, CFA Institute staff may become aware of questionable conduct by a member or candidate through the media, regulatory notices, or other public services. Fourth, candidate conduct is monitored by proctors who complete reports on candidates suspected to have violated testing rules on the exam day. Lastly, CFA Institute may also conduct analysis of scores of exams material after the exam as well as monitor online and social media to detect disclosure of confidential exam information. When an inquiry is initiated, the professional conduct staff conducts an investigation that may include requesting a written explanation from the member or candidate, interviewing the member or candidate, complaining parties, third parties, and collecting documents and records relevant to the investigation. Upon reviewing the material obtained during the investigation, the professional conduct staff may conclude the inquiry with no disciplinary sanctions, issue a cautionary letter, or continue proceedings to disciplinary members or candidates. If professional conduct staff believes a violation of the code and standards or testing policies has occurred, the member or candidate has opportunity to reject or accept any charges of the proposed sanctions. If the member or candidate does not accept the charges and proposed sanction, the matter is referred to a panel composed of DRC members. Panels review material and presentation from professional conduct staff and from members and candidates. The panel's task is to determine whether a violation of the code and standards or testing policies occurred, and if so, what sanctions should be imposed. Sanctions imposed by CFA Institute may have significant consequences. They include public censures, suspension of membership, and use of CFA designations. The revocation of the CFA charter candidates enrolled in the CFA program who have violated code of standards or testing policies may be suspended or prohibited from future participations in the CFA program. Adoption of the code and standards. The code and standards apply to individual members of CFA Institute and candidates of the CFA program. CFA Institute does not encourage firms to adopt the code and standards. However, as part of their code and ethics, those who complain compliance should fully understand the requirements of each of the principles of the code and standards. Once a party, non-member, or firm ensures the code meets the principles of the code and standards, the party may make the following statement whenever claiming compliance. Insert name of party claims compliance with the CFA Institute Code of Ethics and Standards, the professional conduct. This claim has not been verified by CFA Institute. CFA Institute welcomes public acknowledgement with appropriate. When appropriate, the firms may are complying with CFA Institute Code of Standards and Standards of Professional Conduct, and encouraging firms to notify us of the adoption plans. For firms that would like to distribute the Code of Standards to potential clients, attractive one-page copies of the Code of Standards, including translations, are available on the CFA website. CFA Institute has also published the Asset Manager Code of Professional Conduct, which is designed in part to help asset managers comply with the regulations, management coding of ethics for investment advisors, whereas the code and standards are aimed at individual investment professionals who are members of CFA Institute or candidates of the CFA program. The Asset Manager Code was drafted specifically for firms. The Asset Manager Code provides specific practical guidelines for asset managers in 6 areas: loyalty to clients, investment processes, trading compliances, performance evaluation, and disclosure. The Asset Manager Code and the appropriate steps to acknowledge adaptation or compliance can be found on the CFA Institute website. Acknowledgements. The CFA Institute is a not-for-profit organization that is heavily dependent on the expertise and intellectual contributions of member volunteers. Members devote their time because they share a mutual interest in the organization's mission to promote the achieve ethical practice in the investment profession. CFA Institute owes much to the volunteers' abundant generosity and energy to extending ethical integrity. The CFA Institute Standards of Practice Councils, a group consisting of CFA charter holders, volunteers from many different countries, is charged with maintaining and interpreting the Code of Standards, ensuring that they are effective. The SPC draws its membership from broad spectrum of organization in the securities field, including brokers, investment advisors, banks, and insurance companies. In most instances, the SPC members have important supervisory responsibilities within their firms. The SPC continually evaluates a code of standards as well as the guidance in the handbook and ensures that they are 1, representative of high standards of professional conduct, 2, relevant to the changing nature of investment profession, 3, globally applicable, 4, sufficiently comprehensive, practical, and specific, 5, enforceable, and 6, testable for the CFA program. The SPC has spent countless hours reviewing and discussing revisions to the Code of Standards and updates to guidances that made up the 11th edition of the handbook, following the list of the current and foremost members of the SPC who generously donated their time and energy to this effort. Ethics and the investment industry. Society ultimately benefits from efficient markets where capital can freely flow to the most productive or innovative destinations, while functioning capital markets efficiently matches those needing capital with those seeking to invest their assets in revenue-generated ventures. In order for capital markets to be efficient, investors must be able to trust in the market that the markets are fair and transparent, and offer them the opportunity to be rewarded for the risks they choose to take. Laws, regulations, and enforcement plays a vital role, but are insufficient alone to guarantee fair and transparent markets. The market depends on ethical foundations to guide participants' judgments and behaviors. The CFA Institute members maintains and promotes the Code of Ethics and Standards of Professional Conduct in order to create a culture of ethics for the ultimate benefit of society. Why ethics matters. Ethics can be defined as a set of moral principles or rules of conduct that provides guidance for our behavior when it affects others. Widely acknowledged fundamental ethical principles includes honesty, fairness, diligence, and care and respect for others. Ethical conduct follows these principles and balances self-interest with both the direct and the indirect consequences of that behavior for the other people. Not only does unethical behavior by individuals have serious personal consequences ranging from job loss and reputation damages and fines and even jail, but unethical conduct from market participants, investment professionals, and those who serves investors can damage investor trust and thereby impair the sustainability of global capital markets as a whole. Unfortunately, there seems to be an unending parade of stories beginning in the light of accounting, fraud, and manipulation, Ponzi schemes, insider trading scandals, and other misdeeds. Not surprisingly, this has led to erosion in public confidence in investment professionals. Empirical evidence from numerous service documents, a low standard in the eyes of investing public and of banks and financial services firms, the very institutes that are entrusted with the economic well-being and retirement security of society. Governments and regulations have historically tried to combat misconduct in the industry through regulatory reform. With various levels of success, global capital markets are highly regulated to protect investors and other market participants. However, compliance with regulations alone is insufficient to fully earn investors' trust. However, compliance with regulations alone is insufficient to earn compliance trust. Individuals and firms must develop a culture of integrity that permeates all levels of operation and promotes the ethical principles of stewardship and investors' assets, and working is the best interest of clients above and beyond strict compliances with the law. A strong ethical culture that helps honest, ethical people engage in unethical behavior will foster the trust of investors, lead to robust global capital markets, and ultimately benefit society. That is why ethics matters. Ethics, society, and the capital markets. CFA Institute recently added the concept that for the ultimate benefit of society to its mission. The premise is that we want to live in a society politically and financially stable society that foster individual well-being and well-being of the public. A key ingredient for this goal is global capital markets that facilitates the efficient allocation of resources so that the available capital finds the way to places where it is most benefits the society. These investments are then used to produce goods and services, to fund innovation and jobs, to promote improvements in standards of living. Indeed, such a function serves the interests of the society. Efficient capital markets in turn provides a host of benefits to those providing the investment capital. Investors are provided the opportunities to transform risk because the capital market serves as an information exchange, creating investment products, provide liquidity, and limit transactional costs. However, a well-functioning and well-efficient capital market system is dependent on trust of the participants. If investors believe that capital market participants, investment professionals, and firms cannot be trusted with their financial assets, or that the capital markets are unfair, such that only insiders can be successful, they will be unlikely to invest, or at the very least will require higher risk premiums. Decreased investment capital can reduce innovations and job creation and hurt the economy and society as a whole. Reduced trust in the capital markets can also result in a loss of vibrant and not smaller investment industry. Ethics for a global investment industry should be universal and ultimately support trust and integrity above acceptable local or regional customers and cultures. Universal ethics for a global industry strongly supports the efficiency, values, and missions of the industry as a whole. Different countries may be at different stages of development in establishing standards of practices, but the end goal must be to achieve rules, regulations, and standards that support and promote fundamental ethical principles on the global basis. Capital markets, sustainability, and actions of one. Individuals and firms also have to look at the indirect impacts of their actions on the broader investment community. The increasing interconnected nature of global finances brings the fore and added consideration to committing the highest levels of ethical behavior. Today's investment professionals and their employers should consider the long-term health of the markets as a whole. As recent events has demonstrated, apparently isolated and unrelated decisions, however innocuous, when considered on an individual basis, in aggregate can complicate the market crisis and an interconnected global economy and marketplace. Investment professionals should consider how their investment decisions-making processes affect the global financial markets in the broader context of how they apply their ethical and professional obligations. These in positions of authority have a special responsibility to consider the broader context of market sustainability in their development and approval of corporate policies, particularly those involving risk management and product development. In addition, corporate compensation strategies should not encourage otherwise unethically sound individuals to engage in unethical or questionable conduct for financial gain. Ethics, sustainability, and property functioning. Capital markets are components of the same concepts of protecting the best interests of all. To always place the interests of the clients above both investment professionals' own interests and those of the employers remains a key ethos. The relationship between ethics and regulation. Some equate ethical behavior with legal behavior. If you are following the law, you must be acting appropriately. How ethical principles like laws and regulations prescribe appropriate constraints on our natural tendency to pursue self-interest that could harm the interests of others. Laws and regulations often attempt to guide people towards distinguished from legal conduct, but ethical behavior, but does not cover all unethical behavior. Ethical behavior is often distinguished from legal conduct by describing legal behavior as what is required and ethical behavior as what is morally correct. Ethical principles goes beyond what is legally significant and encompasses what is right to do. Given many regulators' lack of sufficient resources to enforce well-conceived rules and regulations, relying on regulatory frameworks to lead the charge in establishing ethical behavior has its challenges. Therefore, reliances on the complaints with laws or to create a truly ethical culture in the industry. The recent past has shown us the same individuals will succeed at circumventing the regulatory rules for their personal gain. Only the application of strong ethical principles at both the individual level and at the firm level will limit abuses. Knowing the rules or regulations to apply in a particular situation, although important, may not be sufficient to ensure ethical conduct. Individuals may be able to both recognize areas that are prone to unethical pitfalls and to identify the processes, those circumstances, and influences that could impair the ethical judgment. Applying an ethical framework, laws, regulations, professional standards, and codes of ethics can guide ethical behavior, but individual judgment is the critical ingredient in making principled choices and engaging in appropriate conduct. When faced with an ethical dilemma, individuals must have a well-developed set of principles, otherwise their thoughts processes can lead to, at best, equivocations and indecision, and at worst, fraudulent conduct and destruction of public trust. Establishing an ethical framework for an internal for internal thought process prior to deciding to act is a crucial step in engaging in ethical conduct. Most investment professionals are used to making decisions from a business profit-loss outlook, but given the importance of ethical behavior and carrying out professional responsibilities, it is critical to also analyze decisions and potential conduct from the ethical perspective. Utilizing a framework for ethical decision-making will help investment professionals effectively examine their conduct in the context of conflicting interests common to their professional obligations, e.g. researching and gathering information, developing investment recommendations, and managing money for others. Such a framework will allow investment professionals to analyze their conduct in a way that meets high standards of ethical behavior. An ethical decision-making framework can come in many forms, but should provide investment professionals with a tool for following the principles of a firm's code of ethics. Through analyzing the particular circumstances of each decision, investment professionals are able to determine the best course of action to fulfill their responsibilities in an ethical manner. Commitment to the ethics by firms. A firm's code of ethics risks becoming a largely ignored duty, complicated if not truly integrated into the fabric of the business. The ability to relate to an ethical decision-making framework to a firm's code of ethics allows investment professionals to bring the aspirations and principles of the code of ethics to life, transforming the form of compliance exercise to something that is at heart of the firm's culture. An investment professional's nature desires to do the right thing. Most are reinforced by building a culture of integrity in the workplace. Development, maintenance, and demonstration of a strong culture of integrity within the firm by senior management may be the single most important factor in promoting ethical behavior among the firm's employees. Adopting a code that clearly lays out the ethical principles that guides the thought process and conduct the firm expects from its employees is a critical first step. But the code of conduct, while necessary, is insufficient. Simply nurturing inclination to do the right thing is not matched for the multitude of daily decisions that investment managers make. We need to exercise ethical decision-making skills to develop the muscle memory necessary from fundamentally ethical people to make good decisions despite the reality of agent conflicts. Just as coaching and practicing transforms our natural abilities to run across the field into a technique of an endurance required to run a race. Teaching, reinforcing, and practicing ethical decision-making skills prepares us to confront the hard issues effectively. It is good for business, individuals, firms, the industry, and the markets, as well as society as a whole, to engage in the investment management profession in a high ethical manner. Ethical commitment of CFA Institute. An important goal of CFA Institute is to ensure that the organization and its members and candidates develop, promote, and follow the highest ethical standards in the investment industry. The CFA Institute Code of Ethics, Code of Standards of the Professional Conduct Standards, and the foundational supporting of the organization's quest to uphold the industry's highest standards for the individuals and corporate practices and to help serve the greater good. The code is a set of principles that define the overarching conduct CFA Institute expects from its members and CFA program candidates. The code works in tandem with the standards, which outlines professional conduct that constitutes fair and ethical business practices. For more than 50 years, CFA Institute members and candidates have been required to abide by organizations' code and standards. Periodically, CFA Institute has revised and updated its code and standards to ensure that they remain relevant to the changing nature of the investment profession and representative of the highest standards of the professional conduct within although the investment world has become a far more complex place since the first publication of the Standards of Practice Handbook, distinguishing right from wrong remains the paramount principle of the code and standards. New challenges will continually arise from members and candidates in applying the code and standards because many decisions are not ambiguous right or wrongs. The dilemma exists because the choice between right and wrong is not always clear. Even well-intentioned investment professionals can find themselves in circumstances that may tempt them to cut corners. Situational influences could empower the best of intentions. CFA institutes have a significant commitment to providing members and candidates with the resources to extend and deepen their understanding of how to appropriately apply the principles of the code and standards. The product offering from CFA Institute offers a wealth of materials through publications, conferences, webcasts, and podcasts. The ethical challenges of investment professionals have brought to light achieved issues of those items are available on CFA Institute website. By reviewing these resources and discussing it with your peers, market participants can further enhance their ability to apply an effective ethical decision-making framework in time. This should help restore some of the trust recently lost by investors. Market functions to an important extent on trust. Recent events have shown the fundamentally questioned investment professionals should remain mindful of the sustainability in their investment decision-making. CFA Institutes and the Standards of Practice Council hope this edition of the handbook will assist and guide investment professionals in meeting the ethical demands and of highly interconnected global capital markets for the ultimate benefit of society. CFA Institute Code of Ethics and Standards of Professional Conduct Preamble. The CFA Institute Code of Ethics and Standards of Professional Conduct are fundamental to the values of CFA Institute and essential to achieve its mission to lead the investment professional globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. High ethical standards and are critical to maintaining the public's trust in financial markets and in the investment profession. Since their creation in the 1960s, the code and standards have promoted the integrity of CFA Institute members and served as a model for measuring the ethics of investment professionals globally, regardless of job function, cultural differences, and local laws and regulations. The CFA Institute members, including holders of the Chartered Financial Analyst CFA designations and CFA candidates, have the personal responsibilities to embrace and uphold the provisions of the code and standards, and encouraged to notify their employers of this responsibilities. Violation may result in disciplinary actions sanctioned by the CFA Institute. Sanctions can include revocations of membership, revocation of candidacy in the CFA program, and revocation of the right to use the CFA designation. Code of ethics. Members of the CFA Institute, including CFA charter holders and candidates for the CFA designations, members and candidates must 1. Act with integrity, competence, diligence, and respect in an ethical manner with the public, clients, prospective clients, employers, employees, colleagues in the investment professions, and other participants in the global capital markets. 2. Place integrity of the investment professionals and the investment clients above their own personal interest. 3. Use reasonable care to exercise the independent professional judgment when conducting investment analysis, making investment recommendations, taking investment actions, and engaging in other professional activities. 4. Practice and encourage others to practice in a professional and ethical manner that will reflect credit on themselves and the profession. 5. Promote the integrity and viability of the global capital markets for the ultimate benefit of society. Lastly, maintain and improve their professional competence and strive to maintain and improve the competence of their investment professional. Standards of professional conduct. 1. Professionalism. Knowledge of the law. Members and candidates must understand and comply with all applicable laws, rules, and regulations, including the CFA Institute Code of Ethics and Standards and Professional Conduct of any government regulatory organization, licensing agency, or professional association governing their professional activities. In the event of conflict, members and candidates must comply with the more strict law, rule, or regulations. Members and candidates must not knowingly participate or assist in the most associate form of violation of such laws, rules, or regulations. B. Independence and objectivity. Members and candidates must use reasonable care and judgment to achieve and maintain the independence and objectivity in their professional activities. Members and candidates must not offer, solicit, or accept gifts, benefits, compensations, or considerations that responsibly can be expected to compromise their own or another's independence and objectivity. Misrepresentation. Members and candidates must not knowingly make any misrepresentations relating to investment analysts, recommendations, activities, and other professional activities. D. Misconduct. Members and candidates must not engage in any professional conduct involving dishonesty, fraud, or deceit to commit any act that reflects adversely on their professional reputation, integrity, or competence. 2. Integrity to the capital market, material non-public information. Members and candidates who poses material non-public information that could affect the value of an investment must not act or cause others to act on the information. B. Market manipulation. Members and candidates must not engage in practices that distort prices or artificially inflate trending volumes with the intent of misleading market participants. 3. Duty to client loyalty, prudence, and care. Members and candidates have a duty of loyalty to the clients and must act with reasonable care and exercise prudent judgment. Members and candidates must act from the benefit of their client and place their client's interests before their employers or their own interest. Fair dealing. Members and candidates must deal fairly and objectively with all candidates when providing investment analysis, making investment recommendations, taking investment actions, or engaging in other professional activities. Suitability: when members and candidates are an advisory relationship with a client, they must A, make a responsible inquiry into the client or prospective client's strengths prior to making any investment recommendations or taking investment actions, and must reassess the update this information regularly, determine that an investment is suitable to the client's financial situation and consist with the client's written objectives, mandates, and constraints before making an investment recommendation or taking investment actions. Judge the suitability of investment in the context of the client's total portfolio. 2. When members and candidates are responsible for managing a portfolio with a specific mandate, strategy, or style, they must make only investments recommendations or take only investment actions that are consistent with the standard stated objectives and constraints of the portfolio. Performance presentation: when communicating investment performance information, members and candidates must make reasonable efforts to ensure that it is fair, accurate, and complete. Preservation of confidentiality: members and candidates must keep information about current, former, and prospective clients confidential unless the information concerns illegal activities on the part of the client or prospective client. 2. Disclosure is required by law, or 3. The client or prospective client permits disclosure of the information. 4. Duty to employers, loyalty. In matters related to their employment, members and candidates must act for the benefit of their employers and not deprive their employers from the advantage of their skills and abilities, divulge confidential information, or otherwise can harm their employers. Additional compensation agreement: members and candidates must not accept gifts, benefits, compensation, or considerations that compete with or might reasonably be expected to create a conflict of interest with their employer's interests unless they obtain written consent from all parties involved. Responsibility of supervisors: members and candidates must make reasonable efforts to ensure that anyone subject to their supervision or authority complies with applicable laws, rules, regulations, and the Code of Standards. Investment analyst recommendations and actions. A. Diligence and reasonable basis: members and candidates must 1. Exercise diligence, independence, and thoroughness in analyzing investment markets, making investment recommendations, and taking investment actions. Have a reasonable and adequate basis supported by appropriate research and investigation. For an investment analyst, recommendation or action. Communication with clients and prospective clients: members and candidates must disclose to clients and prospective clients the basic format and general principles of the investment professionals process they use to analyze investments, select securities, and construct portfolios, and must promptly disclose any charges that might materially affect these processes. Disclose to clients and prospective clients significant limitations and risks associated with the investment process. Use reasonable judgment in identifying which factors are important to use to their investment analysis, recommendation, or action to include their factors in communication with clients and prospective clients. Distinguish between fact and opinion in the presentation of investment analysis and recommendation. Record retention. Members and candidates must develop and maintain appropriate records to support their investment analysis, recommendations, actions, and other investment-related communications with clients and prospective clients. 6. Conflicts of interest. Disclosures of conflicts. Members and candidates must make full and fair disclosure of all matters that can reasonably be expected to impair their independence and objectivity or interfere with respective duties to their clients, prospective clients, and employers. Members and candidates must ensure that such disclosures are prominent and deliver in plain language. Excuse me, that's my fourth yarn. And communicate the relevant informations effectively. B, priority of transactions. Investment transactions for clients and employers must have priority over investment transactions which a member or candidate is the beneficial owner. C, referral fees. Members and candidates must disclose to their employers, candidates, and prospective clients as appropriate any compensation, consideration, or benefits received from or paid to others from their recommendation of products or services. 7, responsibilities as a CFA Institute member or CFA candidate. A, conduct as participant of a CFA Institute program. Members and candidates must not engage in any conduct that compromises the reputation or integrity of CFA Institute or CFA designation or integrity, validity, or security of the CFA program. References to CFA Institute, the CFA designation, and the CFA program when referring to the CFA Institute, the CFA Institute membership, and CFA designation or candidacy. And the CFA program membership and candidates must not misrepresent or exaggerate the meaning or implication of the meaning of the CFA Institute holding of the CFA designation, candidacy of the CFA program. All right, this concludes reading 2 of the program curriculum for level 1. I do hope the readings have been helpful, and I am going over all 60 readings of the CFA program. And next, reading 3 is going to be a big one. Reading 3 is going to be a very long one. We have multiple pages. So I do hope these readings of the CFA program curriculum is helpful. And I hope to see you guys in the next one. Goodbye.